Hi everyone, it's Sean from Pulse Markets here today. Again, we've got one of our favourite fund managers, John Forwood, with us, just getting an update on the commodities sector. As you all know, the Well have been around us for quite some time. The performance is very good, and we're a little bit concerned about what's happening in the markets at the moment. We've had a bit of a run, so what better person to ask than John as to what's happening in the commodity space. But firstly, welcome, John, and thanks for coming.
Sean, great to be chatting with you again. I'm delighted to have the opportunity, and thanks for your time.
You're welcome. I know you're busy, so we'll make this short and punchy. We've asked some investors for some questions, and today we've got the first one off the rank, and there's 5 today. Is China is 50% of many commodities in terms of purchasing. What do you think at the moment is impacting Chinese commodity demand?
Yeah, I think there's probably 3 main things that are sort of front of mind that we're getting news out of China on. Firstly is, and probably a short-term factor, is the drought. There's a drought in some key manufacturing provinces like Sichuan, and that has caused energy shortages or energy restrictions, and it's caused manufacturing restrictions. The other negative that's happened, which is longer term, is the real estate crash or crisis in China and construction. And there's a number of companies that are in crisis there in China, and that's affecting the construction sector. On the other hand, the government has announced a number of stimulus packages, and several of the key interest rate benchmarks have been cut at least once, if not twice, since the start of the year in China to help stimulate the local economy.
Okay, thanks, John. We've noticed, apart from gold, you've really been focused on the thematic of copper for some time. How is the copper market looking at the moment?
It's almost gone under the radar how low the stockpiles have got in copper in particular. The whole industrial metals complex stockpiles or warehouse inventories are very low. They're at multi-year lows, but copper in particular is down to half a week's of global demand in the exchange warehouses, and that's really a wafer thin amount which could disappear, very, very quickly. So, and part of that is related to the shortage of smelting that we've seen in China and elsewhere. So, look, there could be a real sudden spike in copper anytime soon. Longer term, obviously, copper is a very big part of the decarbonisation and electrification theme. A number of commentators are calling a shortage of copper supply to really kick in from 2025, when mine supply really starts to be forecast to be in shortage. And we're seeing that play out in the markets. Here in Australia, we saw the bid by BHP for major South Australian copper producer Oz Minerals just in the last couple of weeks, showing the demand for copper that the big guys are seeing.
Okay, thank you. Okay, that's in the big part of town. The Well is more focused on the junior resource equity market. How has the Well positioned the fund recently?
As you mentioned in the introduction, we've seen quite a correction in the market, and junior resources has probably been in line with the rest of equity markets in terms of the correction we've seen since probably mid-April. But the fundamentals in terms of commodity supply and demand in things like copper are still looking excellent. So we're seeing some great value emerging in some of our favourite stocks, and also in some new stocks. I think one of the things that's happened is, we've seen the US dollar at 20-year highs, and commodities are priced in US dollars. So we've seen a bit of pressure on US dollar denominated commodity prices, and that's flowed through to perhaps demand for resources stocks, and particularly in the more junior sector. But it's also, on the other side of the coin, attracted money into the US, into bonds and interest-bearing investments, as interest rates rise. So we've sort of seen pressure on the market, but fundamentally we see some really exciting investment opportunities.
Okay, thanks, John. Just back to gold. What areas of the gold sector are showing the best value at the moment?
Look, I think the more speculative end, perhaps the higher risk, more exploration end has been hit harder than most of the other parts of the gold sector, and some really good value is emerging for companies that have some excellent prospects in terms of exploration and the potential for discovery. So there's some good value there, and at the same time we're seeing that the pressure on things like drilling rigs, assay laboratories, sourcing geologists, it has really come off. So those companies, if they are able to access sufficient capital, are able to explore their projects much more efficiently this year than last year.
Okay, well, that brings us to our last point. Are there any other commodities that look particularly interesting at the moment?
Look, I think gold remains very, very interesting, particularly, the US dollar gold price has been soft, but if you look in many other currencies, such as the Australian dollar gold price is at $2,500 Aussie dollars an ounce, which is a fantastic price. And that's starting to catalyse more and more M&A in the gold sector. The commodities that have been strong, and even these were strong going into or prior to, I should say, the Russian invasion of Ukraine, but gas price in particular has skyrocketed, and we're seeing that in Australia with caps on being imposed on the gas price. But those caps are at 10 times the levels that we were historically used to in terms of gas price on the east coast of Australia. So that's very interesting. Lithium has been super strong and remains super strong, and that some of the lithium processing capacity has been affected by the drought in China, but the demand for lithium in EV batteries in particular continues to grow, and the forecasts are for that growth to almost become parabolic as the take-up of EVs continues. And then another one that is interesting on the EV thematic is manganese, in terms of trying to reduce usage of other metals such as cobalt in lithium-ion batteries. Manganese is something that can potentially play a role in maintaining the energy density of a battery, but reducing the requirement for, say, the amount of cobalt that needs to go into that same battery. So we're watching the manganese market with interest.
John, as always, it's a pleasure. Thank you so much for your insights. It's really, really good to hear. And I look forward to speaking to you soon.
Sean, thanks very much. Thanks to you, and thanks to Pulse Markets for taking the time to have a chat.